This is a Brooklyn-bound 2 train. The next stop is
Wall Street.
Stand clear of the closing doors, please.
Welcome back, everyone. Hope you had a great weekend. If you celebrate or get that Labor Day weekend off, hope it was a restful and fun one. We have a lot to cover today. So I started recording this at 3:57 New York time. So the markets are still open and the markets are still deep in the red, trying to come off the lows. As we speak, the Dow, I believe, is down 670 points, give or take a few points. You have the S&P futures down 122 points. The NASDAQ futures down 613 points. The Russell futures down 70 points. But I am sure they're going to try to do some type of rally into the close as much as possible with 3 minutes to go. So the numbers might change, obviously, in the next 3 minutes, which I won't reflect while I'm recording live. But taking a look at breadth, we had 394 new highs versus 227 new lows on the NYSE. 16% were advancing versus 82% declining. 42% of stocks were below their 50-day, and 37% of stocks were below their 200-day moving average. When you take a look at the NASDAQ across the board, they had 30 new highs versus 111 new lows. If you take a look at sector analysis, I'll go through the mega caps in a second. Every single sector was red except for consumer defensive. Technology led the way down 4.4%. Basic materials down 3.5%. Communication services down 2.8%. These are all percentages. Industrials down 2.7%. Energy down 2.6%. Consumer cyclical down 1.6%. And I just want to say, and this is not really patting myself in the back, but I just want to remind you all, if you try to just remember last week going into the long weekend, everyone was dismissing the sell-off like it's over. That sell-off about the yen carry trade is done. Everything is safe to come back in the water. We're gonna rally into the rest of the year. It's a new bull market, and I'm sure you recall the sentiment last week. Not this guy. I was warning all of you. This is not the time. I know I'm just quoting myself. I said this is not the time to go YOLO long. This is the time to be in best defended names and to be safe. I know I wrote that in Substack notes, in the free chat, in the premium chat. So I have been warning you all that this is not over. And it's not over. So one of the things that I wanted to mention, and by the way, thank you all for the new paying subscribers that joined with the Labor Day discount. Welcome aboard. And throughout today's session, for the premium members, I've been on the private chat doing a play-by-play of this entire market. Even before we had the nasty sell-off this morning, I warned everyone on the private chat, if this does not bounce here at this level, at this balance area extreme, it's going to spell trouble for the markets. And literally, these are my screenshots. I'm not going to read every one, but they're all in the show notes. If you're listening to this on the radio or Spotify or Apple Podcast, just go to nyugrad.substack.com. You'll see today's podcast show notes, and I have screenshots of all of these chats from today. Basically starting in the morning, where I noted that there is a 5-minute balance area as well as a long-term balance area that I was watching. The 5-minute one could have broke either way. It broke to the downside. And then I said, we now need to watch the larger balance area. And we were getting close to the bottom of the long-term balance area. And that too, I said, if we don't hold here, This is going to spell trouble for the markets. And we broke even the long-term balance area. And that's when you started to see the market go from Dow down 300 to Dow down 700, and the selling started to accelerate. So this is why I follow auction market principles and I trade balance areas as well as the edges. As a reminder for those that did not participate or listen to Friday's free lesson on auction market principles, please take a listen to that. That was the previous episode from Friday. But basically, prices of anything in an auction, whether you're looking at sneakers on eBay or the stock market, prices are either in balance, where the majority of time and volume of buyers and sellers agree to exchange money for a thing. So it's either in balance in that range, or it's not in balance, seeking a new range that can facilitate the most time and volume for exchange of an auction market. That's all that's going on here. And we are now potentially moving out of this longer term balance area south, seeking a new range to facilitate the majority of time and volume for trading. So take a look at that lesson as well as some of these show notes. But let's take a quick look at what stuck out. So the market is now closed, and let's see where we closed the day. We closed a little bit off the lows. We closed down 626 points on the Dow, but still pretty bloody session. But what was strong on the session? You had the VIX up 30%. I noted September might be volatile. You had SOX S, which is short the semiconductors, up 22%. TZA up 9%. SQQQ up 8.8%. SPXS up 6%. SPXU up 5.9%. TSLQ up 3.01%. TSLZ 2.92%. FAZ 2.05%. And SH up 2.02%. These are all bearish ETFs or long volatility ETFs. What was weak? SOX L, which is long semiconductors, down 22%. SVIX, which is short the VIX, down 17.7%. IREN down 12.8%. TeraWolf down 12.8%. FNGU down 10.8%. Riot down 10.2%. Bitfarms down 9.9%. HUT down 9.9%. NVIDIA 9.6%. Marathon Digital down 9.4%. Hovanian Homes 9.3%. TQQQ, which is bullish Qs, down 9.1%. Intel down 8.8%. Let's transition to just the top semiconductor names in the SOX index. Monolithic Power Systems down 10%. On Semiconductor down 9.8%. KLAC Corp down 9.3%. Marvell down 8.29%. AMD 7.84%. NXPI 7.7%. Micron 7.6%. Qualcomm 6.8%. Advanced Micro Devices, I believe it was down like 6%. NXPI, I already did NXPI, sorry. MU 7.5%. Qualcomm 6.8%. AMAT 6.8%. Microchip Technology 6.7%. TSM, Taiwan Semi 6.5%. Lam Research 6.5%. ASML Holdings 6.4%. Broadcom 6.29%. Texas Instruments 5.37%. So for free members, this is not the time to go YOLO long NVIDIA. We are below the split price, and NVIDIA and the semiconductors are being sold hard. Next week, just what to watch, you have the CPI, PPI numbers. You have the Apple iPhone 16 event, September 9th. You have the debates between Harris and Trump on September 10th. And then you have FOMC rate cut, evidently decision, September 17th through the 18th. So I will see you all after the Wednesday session. Premium members, please stay on. I have about 20 charts to walk through with you today. That's my train.
Stand clear of the closing doors, please.